All right, I heard the bell.
Yeah, I heard a bell. Means time's up.
All right. So let me stop sharing and share my trading view, my TV. Ben, can you see my screen?
Yeah, I see a blank page now. I don't see the screen now.
Okay. Just give me a minute. Okay, I think you should start seeing my screen in just kaboom. All right, I hope you can see my screen now. Ben, I hope you can see my screen now.
Yeah, perfect. I can see your screen now clearly.
Okay.
Clearly, yeah.
Okay, so we're starting. So I don't know where you are, but good afternoon, good morning, good evening to you, and welcome to DiviProp Capital live stream. We're going to talk about signals. We're going to talk about the market outlook. We're going to talk about fundamentals and geopolitics. What's happening in the Forex market or financial market, ranging from the commodities market, crypto, and also the FX market, talking about the currency pairs. So I'm just going to kickstart with everything. Yeah, I forgot to introduce myself. I'm Emmanuel. I'm doing this with Dr.
This
Bernard.
is Bernard. Bernard, yeah.
I got you right there. Yeah, so let's start off with the DXY. So with the DXY, we had some interesting data points coming in last week. All right, we had some interesting data point coming in, which is the unemployment rate. It came in actually lower than expected. So we're talking about a country where the number of people who are seeking for employment is going low. That is a very positive thing for the dollar. So I believe that accounted for the reason why we had dollar strength. We had dollar strength in the coming week. The last we met, which is last week we forecasted that we might get a pullback. At that time, the dollar came back to test. Oh, hold on. Excuse me.
Yeah, definitely.
Bern, you can hear me, right?
Yeah, I can hear you clearly. Yeah, Prof.
Awesome. So last week we had the dollar coming to test the 99.27234 resistance level, a very important resistance level, because this level historically served as a support level, okay, and it's now serving as a resistance level. So you can tell the magnitude of that level, a very important level. But then we had a pullback around the 98. We came all the way back to 98.70, of which we talked about last week, which is a very healthy thing for the market. The market moves in waves, higher highs, higher lows, lower high, right? So we made that beautiful high, and then we made a retest, and then kaboom, we ripped through this resistance level, pushing really strong, and now we are retesting that level. A very, very important level which has been broken. So in the coming weeks ahead of us, what is going to happen? So now we are speculating that we could be heading back to that 100 mark. Okay, that 100 mark that Bernard and I, we were ranting about that level some months ago back in 2025.
Yeah, I was there. Still feels like
You remember,
yesterday.
right?
Yeah,
Exactly. Still
definitely.
feels like yesterday. So we could be heading back to that level. Okay. So what does that look for other currency pairs like the euro, the pound, the Canadian dollar, and all that? So if the dollar is getting strength, then we can anticipate or speculate that we can look for shorts or those currency pairs may be selling because the dollar becomes relatively strong compared to those currency pairs, right? So as I said, we could be heading back to that 100 level, which is really good. Now, coming into the week, what you can be looking out for, we're going to have some interesting data points coming in, very very important. And hold on a little bit, let me just show. Okay, so on the 22nd of January, we're going to be having personal spending. Okay, we're having personal spending monthly coming in, and then we have core PCE price coming in, something to tell us about the inflation. Okay, we're having personal income monthly basis also coming in. All right, we have personal spending, so we're going to be getting a lot of data points on inflation, which is really important. And finally, the almighty GDP, the gross domestic product. Now, the reason why this particular data point is really important because it tells the how do I put it, the growth factor of the economy. Okay, now the gurus are forecasting 4.3. Previous we had 3.8, and so if we get this 4.3, what's going to happen with the dollar? What's going to happen in the markets, and how can you prepare yourself as a trader? Because we have discovered that the fundamentals tell the story, and the technicals, not technicals, but the candlesticks print what's happening in the market, right? Bernard, are you there?
Yes,
So,
I'm
Ben,
right here. I'm right here.
I'd like to know your thoughts. If we get that
Okay.
4.3 or 4 point something around anything above 4.3, what are your
Now,
thoughts? What do you think happened in the market, and what as traders,
yes.
what do we expect?
Yeah, thank you, Profima. Yeah, so to throw more light on Monday, which is tomorrow, is going to be a holiday in the United States, which is the Martin Luther King Day. So
Yeah, that's right.
you're not gonna have a lot of movements, happening in the market on Monday because it's going to be a national holiday, right? So probably
Yeah.
what you should be looking for is Tuesday and then the remaining 4 days in a week, right? Now back to the fundamentals we have here. Now, the major fundamental we're going to be looking at this week, among all these being high in index fundamentals, the major one is going to be the GDP. GDP is like something you can overlook, right? So most of the market participants are going to be focused on what the GDP is going to print. So everybody has a keen eye on GDP. Now, previously we had 3.8, which was in the past time that this particular indices was reported. Now, the financial analysts, the hedge funds, and all the other people involved in giving this statistic out there are predicting that we are going to have a 4.3 GDP this time around, first quarter 2026. Now, a GDP rise in itself is actually an indicator of a nation or a company or a nation that is doing well. In this case, a nation, because we're talking about GDP. That is, you're looking at the gross domestic product of the country. So a growth in GDP is actually an indication that the economy is booming. We are doing great. We are doing well in that particular nation. So what that means for its currency is that because we are doing well, everybody wants a piece of the pie, which means we are attracting investors, we are attracting markets. So GDP being predicted or forecasted to go higher would actually be a strong foot for the dollar in this case. Yeah, so that's my overlook on it. That's my overlook on it, how I see it, which means that we should be expecting like rises in the DXY if you are looking at that data.
Yeah. So Bernard, man, I couldn't agree with you more on this. This is really awesome. Thank you very much for throwing some light on that GDP outlook thing. So yeah, as Bernard has said,
Thank you. Thank you, Profima.
GDP, man, you're welcome. GDP rising is an indicator that the economy is booming, which will attract foreign investors to come in there. So in the coming weeks ahead of us, we can speculate that we probably might get some move higher on the dollar, probably something like this, and come back and retest this level, then we can probably go back to that 100 level. Okay. Now the reason why we keep focusing on this 100 level is because price has tested this 100 level on multiple occasions, and so it's only reasonable that when we get here, we would experience some reaction in the market. All right. It's the same way that we can also anticipate that, well, let me pick my Fibonacci from swing low to swing high right here. If price is still not able to sustain this move, right? Let's say we are not able to, GDP numbers come in and it comes in very bad. It comes in somewhere, something very low. Then we can expect probably the dollar to, come back low here and probably test the 50% or 61% level, and then maybe see if we can move higher again on that note. Okay, so on that note, I think that's all we're going to be talking about the dollar for now. Yeah, Bernard, do you have anything to add up before I move on to the next thing?
Not at the moment. Not at the moment. I think whatever we've shared so far, I couldn't agree more. Definitely not at the moment. Yeah, so you can proceed.
Okay, thank you, man. All right, so dollar. We're done with dollar for now. So me personally, I will be looking for dollar longs until price action tells me otherwise, and also fundamental tells me otherwise. Right. Okay. All right. So in the camp of currency pairs, maybe let's look at Euro USD. Let's just look at Euro USD. All right. So then, if we are looking out for buys on the dollar index, then we can be looking for some further sells on the Euro USD, right?
Yes, definitely.
Yeah, we can see clearly that the euro is actually taking a hit from the dollar strength. Price was from somewhere around like from November 2025. We were getting some higher highs and higher lows, right? Until we made an equal high around this level. Then price starting to sell off really hard, right? So we are in this small bear market around this level. Okay, so in the coming weeks ahead of us,
Yeah, so I think what is going to happen in there is that it looks like we've actually broken that structure, the higher lows on the bullish side of the Euro USD, and this actually is the same case for the GDP USD, AUD USD, NZD USD, all the dollar codes that have that XXX USD kind of pair. Right. So what that means is that what is going to happen on this is going to be the same thing all across board. Yeah, I think Profima, you can
thank you for holding that down for me. I am back.
Yeah.
I am back and I'm staying. All right. So so as I was saying that it looks like we finally came back to test that 1.15831 level. Okay. So in the coming weeks, maybe we can go higher, but we didn't really break through. So we can get a pullback somewhere around this level, maybe a pullback into the 1.16186 level, then we can drop hard. Let me just draw that here. All right. So where's my brush? Yeah, this is my brush. So if we can get a pullback to test this level again, we can probably be looking for sales around this level. The 1.6234 level could be a very interesting level to short the euro, okay, against the dollar. Or if you are a breakout trader like I am, you can look out for a breakthrough this support level. That's 1.15838. I'm sorry, the numbers is a lot, so pardon me. So yeah, around this level, if we can get a retest around this level, we could be heading to that 1.149, this level, which should present a very decent reward looking at it. Bernard?
Yeah, perfect. Yes.
Yeah.
I think in my opinion, I'll be looking at the retest, more retest in this case, because it looked like we strongly broke lower. If you look at the price that went through that level that you said, the level at 1.1637. We broke that lower. So I'm just looking at a little bit retracement, probably just below that level again, and then I'll be able to short and put my SL maybe above the highs of that region. Yeah, so that's what I'm looking at. But this will turn out to be like a trade that you would want to hold for like throughout the week, possibly. Yeah, probably do a 1 to 3, 1 to 4 risk to reward on it on the short side. Yeah.
Exactly, man. Exactly. I mean, that would present a very decent risk to reward, looking at it from that level. So those are three EURUSD. I think that's something you probably might be looking out for. Right?
Ofima, let me pass this out real quick before we continue, right?
Yeah, sure.
I believe some of us have questions, so if you'll be fair, you can. I think there's a possibility to kind of leave your questions as comments or chats on the meeting. So I'm seeing some hands raised up. So if you have any question, you can just leave it on the comments or the chat, and then we'll be glad to address those comments or questions that you might have. Thank you.
No, thank you, Bernard, for passing that out. Okay, so that is all. That's what I'll be looking out for on the EURUSD. I think we're going to have the same thing for the pound. Let me just look at it. The pound USD. Pound USD. Oh, this is a beautiful chart. This is a beautiful chart. Now, look at what happened on Friday, Bernard.
Yeah, I'm logged in. I'm logged in on that. Yeah, definitely.
Exactly. Lovely candlestick, telling us that. Look at the Friday candlestick. This is telling us that there's very strong selling pressure on the pound at the moment, right? So in the current at this very instant, we can expect that the pound could drop lower, maybe targeting that 1.32852 support level. Let me just mark it right there. Target this side, or probably this side.
Yeah.
Right. Yeah. If we are able to get a retest, somewhere back around 1.38 on the 4H time frame, just look at it. So if you can, let's talk about the market structure right now, right?
Yeah.
So
can do that.
we were in a good uptrend, right? We were in a very good uptrend. The market was making some higher highs and higher low, right? Now this was the high that it made. Okay. Now look at this.
Yeah, break of structure.
Exactly. A break of structure, right? If I were to be looking at this chart when the structure got broken, I think I would have been looking for an opportunity around this level, Look at it. Very beautiful. Market came to tap just in between the 61% and 50% Fibonacci level. I love buying around selling. In this case, I'll be selling. I'll be selling around this level, just in between that level. So let's see if the market has made a low here. So let's see if we can get market can dip a little bit lower and then give us some kind of a lower high. All right, for a beautiful selling opportunity. Okay, if we can, we can get that thing, that would be really good for us to sell the pound against the US dollar. Bernard, do you have any comments on this?
Yeah,
I don't want
for me
more about currency pairs because that's your field.
Yeah, it looks perfect. It looks perfect, right? But what I would also love to see is that if the market opens, right, I would want to I want you to kind of retrace just a little bit on the sell side. Probably try to go like higher, maybe like 1% or 2% higher.
Yeah.
And then I'll be able to have now whenever I'm taking a trade, I would want a point for price to kind of maximize my risk to reward. That is me. I mean, I wouldn't call myself a more aggressive trader, but that is what I'm usually looking at whenever I'm taking a trade. That is, I want the position or the opportunity where my risk to reward will be maximized. So in this trade, there are actually two ways that I'm going to be looking at it. If you can go to the 4H, Ima.
All right, I'll do that a bit for you.
Yeah, thank you. So in my case, I'll be looking at two basic scenarios for that. That is, it's either we have since it's loading. So it's either we have a pullback to where you've marked. Perfect. Either we have a pullback to the 1.3396 level that you've just marked. Just so my stop loss will be just a little bit above that. Or even if market opens aggressively, then I'll be looking at having my short orders around maybe 1.342. Yeah, either that, and then my stop loss will be maybe above 36 or something, 1.346, above that level. That is the first scenario. Now the second scenario will be that if the market opens and it opens downwards, right? If it opens downwards, then what I'm going to do is, if you look at the far left, there was this level that was created on there. That I think it served as a resistance for some time, and it got broken in, and we had these highs, right? So if you go lower, then I'll have to wait and then look at the retest to this region that we are currently at, then go on and short. Now, if I'm looking at the second scenario, then my entry will be just around this current level, with my stop loss being above the initial highs that were created around 1.3400. Then the shorts will go on to the current marked level. So that is how I'm looking at this with the analysis that I have on the as we discussed. Yeah.
Okay, Bernard, thank you very much. That's a very lovely outlook. So I think I'm done for now with the currency pair. So I think you can continue the currency pair before we move on to the commodity market. We talk about gold, silver, and possibly crypto.
Perfect. Yeah, perfect.
People can't wait to hear about
definitely.
I tell them.
Definitely, I like to monitor what crypto BTC is doing.
Exactly.
Thank you, guys. Can I make a little bit input? I'm sorry, I was just coming from church, so I'm now focusing. Can I make a little input of something I saw?
Yeah, but sure, I hope it was.
Okay, yeah, so that should be on Euro USD. Okay. Do I have the...
Calvin, would you like to share your screen? Is that what you want? Or maybe Ima can share it for you.
I want I would like Ima to open that, and then I'll just let him show it just to confirm the thing that he had already said. It's something that I was studying and I saw this week.
Perfect.
Yeah. on Euro USD.
Mafima, can you share Euro USD?
Yeah, so if we will go to the monthly time frame, I think that will help a lot for me to show that. So yes, so this will be a lot.
Perfect.
Good.
Perfect.
So with this chart, well, your chart, you know, to the left side, I think if your chart can, I mean, if you can zoom a little bit or stretch it to the right side, so we will see what is below. If you can have the extreme price below the current lower low, all-time low, if there is anything to the left side below. I have a price action on the monthly time frame that gives me a resistance point. Yes, I think you have that. So if you check it like that, yes, when you use your fib to measure from the most recent support, which is the higher low that made the all-time high. I know this is like back years of history, but the market always also works within those ranges. If you measure the fib, you will see that price is touching extreme discount, which is something around 78.6. It touched the 61.8% and move up and then drop back to 78.6%. So that is where the reaction we are seeing right now is happening, right? So that is the first thing that I saw that was very interesting to me. Okay, so it means that this pair from this angle looks bullish and we are in discount. So there is a higher likelihood that if we get a proper break of structure to the upside, we are going to be able to have more bullish movement, which means the dollar in the longer run or longer term will be bearish. So that is one thing I saw. I hope all of you see that too. Then if you go to that internal area of consolidation where we are currently, you can see that there is a lower high and then price dropped down, couldn't make a lower low, and then it moved up and made another lower high, and then that one gave the all-time low we are seeing now. Ima, please, are you seeing that, please? The high that gave the all-time low that we are seeing right now. So from that lower high to that lower low, which is the all-time low we see now, I will consider that as a perfect break, like a break of structure to show us the price we want to go down more. So for me, until that higher low is taken out, then I will know that, okay, then it means that the discount price on the bigger picture I showed earlier is working. So, but if you check right now, please, can you use your fib from swing lower high to the swing lower low, that range? Swing lower high, good, perfect. Thank you for that. You will see that price is consolidating and working around 78.6%, which is also deep premium. Okay, deep premium. So what normally happens around this place is that when price gets here, it always moves back and forth within the 78.6% and then the 61. It does a rate test of 61.8%. Always. I've been monitoring this for a long time, and currently that is what happened on BTC also. So what I can say is that if the dollar is going to be going more bullish, it makes sense that the your ticks and forecast and on GBP USD and Euro USD is suggesting that we are likely getting to also go bearish. So the long-term projection for me is if this 78.6% is going to be holding, price could possibly move back to 61.8%. If you can put a line from where price is to the 61.8% level, a little down, good. But what I have seen in a longer term is if price is going to continue going higher and it gets to a deep premium like this, 78.6, it will always come and utilize fair value, which is equilibrium, 50%. So the immediate target for me will be 61.8% from this range you've measured, price dropping back. But the other intermediate long term will be equilibrium, which is that supply that was taken out, 50% there. So that's what I saw when I was studying this from the bigger time frame range. And I thought it was very interesting. And I was happy when I see all the projections and the forecasts you are making is suggesting that GBP USD and Euro USD is likely also telling us that it wants to keep dropping. And then the dollar is also showing signs that it wants to probably keep going up. So the conclusion I want to add to all you have shown is that I also think that what you are sharing is very, very, very valid and true. And for me, in the longer term, maybe Euro USD is going to be more bullish, but in the intermediate term, we might have a drop to 61.8% level or even 50% level before that continuation of that bullish move. So that's what I studied this weekend. I hope it makes sense.
Yeah, perfect, Kevin. That was a great submission. That was amazing. That was very, very good. Yeah, so I think it's pretty fair to look at the obvious in this case, right? That is, we are actually kind of having a very healthy pullback on this, and not only that, it's going to happen across the Euro USD, GBP USD, AUD USD, and all the other XAUUSD pairs. And the reverse of this case is going to happen on the USD, maybe USD CAD, USD CHF, USD, or all the other USD pairs, right? So you're going to see the reverse of this case. That is, you're going to see buying momentum on those pairs as well. So yeah, the reverse case works on it. The only thing that is important is that we as traders and we are DiviProp, what you're actually doing is we are not giving signals out there. We are giving an outlook or an overview of what is going to happen in the market. Now, based on the outlook, you can actually determine your trades, which is going to be, or which has to be according to your trading plan, right? I think one of these days we need to kind of delve a little bit into the trading plan aspect and risk management aspect. But what you will be doing is that you're actually going to take what you are presenting in here and have an idea of what you're going to be looking at or focusing on in terms of trades that you're going to be taking in the course of the week. And that is our main objective, our main goal in here. Okay, so I think there's a challenge right now when it comes to chatting or asking questions on all the members who are listening. But currently, we don't have a way to address that challenge. But what we can do is that this session is being recorded. So when it's done, or when the meeting's done, in the next hour or 2 hours after the meeting, the video will be posted on YouTube and then the link shared on the page. Just so if you have any comments, we can kind of address all these comments in the comment section of the YouTube post, just so we can get interactive and share more ideas on there, because we are trying to make this meeting as short as we can, just so we can have all the questions discussed on the YouTube session. That will be something we are looking at, because we currently do not have a session or a page to kind of post comments or chat on that. We are resorting to that, and we are sorry for any inconveniences that might have brought. Yeah, thank you. So I think Prof. Yuma, you can start on the gold, and then possibly we end with BTC, right?
Yeah, thank you, man. Kelvin, thank you so much for the submission. That was awesome. Bernard, thank you. And okay, so let's go to BTC, gold, a people's favorite. So I know, right?
So now I don't know what is the people's favorite, whether it's BTC or gold. I'm kind of torn in between.
Man.
I think Evelyn will say gold. Evelyn will say gold,
yeah,
and Kevin will say BTC.
Anyway, I hope you can see my chart.
Yeah, perfect.
Awesome. So this is gold on the monthly time frame, and this is crazy. This is crazy. So I don't know who's trying to short this But I know some people that are shorting it, and that's awesome. If your trading system is telling you to short it, that's okay. But for me, I am still bullish on gold, and these are my reasons. So first of all, let me just go back to the weekly time frame. So the whole of last week, this is what happened on gold. Look at it. This is what happened on gold the whole of last week. I want us to just do a little candlestick anatomy. I know there are science students in here, but anyway, look at the candlestick that formed. Okay.
Yeah, it was crazy.
And that
it was crazy.
It has no wick below it.
It has no wick.
So what is that telling you? The candlestick is having no wick.
It's just saying we ain't playing.
We ain't playing. You understand? Like this is a crazy move. It's a crazy move on gold, telling us that the bullish momentum is really, really strong. Now, any form of pullback we're going to get on gold is going to be a buying the dip opportunity. Now, let me tell you why. Let me show you why. I've already said why. Let me just show you why. Now, we have something we call the COT data, which is the commitment of traders. The data, they release the data of the big banks and the institutions, their current positions, like what they are doing in the Forex market, in the commodity market. So let me just show you that real quick. And let's see what the big guys are doing. And me, the small fella, what I'm supposed to do. So there's my indicator, COT data report, and kaboom, there we go. So Bernard, I hope you can see that little
perfect.
That little table down there.
So I don't think you get any this analysis anywhere apart from DiviProp. Yeah.
Yeah. Oh please. Nobody So so the commitment of traders report is released every Friday. It's very legal to know what the big guys are doing, right? It's not the holy grail. It doesn't tell you when to enter the market and when to exit. It just tells you what the big guys are doing. So this is the commercials. So the commercials they normally hedge. Okay, so when something is buying, they want to sell. That's a commercial. So I'm not going to talk about the commercials, but I'm just going to talk about the institutions, the big banks and all those kind of people. So last week, the central bank, last week they were 87% long. Can you mention this?
This is crazy.
Price? This is crazy. So institutions are crazily long or bullish on gold. And look at retail. Retail traders like you and I, we are also 76% long on gold. Do you understand? So institutions are buying more gold. Reasons why they are buying gold, we have already explained this over and over and over here at DiviProp. You get it? So institutions are buying gold, so I'm going to buy gold as well. But I would love to buy a cheaper gold. So pullbacks are going to be awesome for buying the dip opportunity on gold, right? But then this week too, we are going to have, we already mentioned that GDP is coming in. So if GDP comes in and it is very good, we're going to see some healthy pullbacks on gold. And that's going to be a very nice way to buy gold if we were able to get that pullback. So I'm going to be waiting personally. I will be waiting on gold to see if we can get some pullback. If we don't get any pullback, I'll just sit on the sidelines and watch for now, right? For now.
Do you see something really interesting happening on the USD? I think you touched on the gold, but you didn't talk about the USD.
Really?
Yeah. USD,
I figured we have already talked about this over and over again. So by the way, institutions are short on DXY. They are selling.
Yeah, the numbers are close. Yeah.
You understand? So they are actually 45% long and then 55% short. Okay.
Now, I also think what is actually making these numbers kind of close is because of people waiting for the GDP. So most people don't want to be be on one side. They're just waiting for the numbers to see on GDP. And the GDP is going to actually be determine a long-term trend for what is going to happen to the dollar in this case.
Exactly. So hopefully GDP can tell us probably the direction of the dollar, maybe all the way through maybe Q1 for us to see how the dollar
the whole
will
of
be.
Q1,
the whole of Q1, because if you look at the dollar, let's just look at it very briefly, quickly. Oh, I just expanded this guy. Delete. All right, so DXY, let me just show the DXY real quick. We're actually deviating a little bit. Sorry about that. So those that were able to join when we were doing our Q1 forecast, we said that the dollar is actually in a range right now on the bigger picture. Okay, so if we're able to get some data points that is going to discredit the growth of the dollar in the long run, then if we actually break out from this range, we could be heading somewhere around 89.645. You understand? On the long run. So where it is actually, where the dollar is sitting actually is a very important level, because first of all, it is actually testing a multi-trend line. You understand? It is testing a multi-trend line. So I will just be on the lookout to see what actually happened. If we can get a breakout above here decisively and push higher, or we can get a break to the downside and then we sell the dollar, right? So institutions, they already short the dollar. They have the big money. Me, I don't have the big money. Bernard, do you have big money?
I think I'm building it somewhere, but I'm not there yet.
All right, man. Yeah, so back to gold. Now let's look at possible trade ideas on gold, what I will be looking out for on gold. Friday we had some interesting sell-off, which was a buying the dip opportunity for some people. I was very busy on Friday, so I didn't buy the dip. But gold is currently stuck in this range right now, somewhere around the 4,506, 567, and then the higher, the recent high, which is 44643.739. That level, I'm going to be watching this level very keenly, because I do swing trading, so I want to see a decisive break above or below for the next direction of gold, right? But then GDP is coming, so I want to be very cautious this week. I want to be looking at the data points that will come to direct me or guide me for the next few weeks ahead. So if I have to sit on the sidelines and not trade gold and just watch so that in the long run I can get a direction, I think that's my best bet, right? But then if we break above this current resistance level right here, that 4643, that level, then I think the path of least resistance will be to the upside. We're probably heading to that round number 4,700 and possibly maybe even higher. But if we get a pullback too, that would be really awesome. Maybe we can use the opportunity to close that gap. I know there are a lot of people that are waiting for gaps to be closed, but some gaps can remain unclosed, because if you look at the stock or the how do I call it, the indices, you can look at some of them, like Nasdaq has some crazy gaps down, which has never been closed. Yeah, so gaps can be closed sometimes. It can be left unclosed. The market does whatever it wants. We were just mere speculators, right? So let's look at pullback opportunity. If we get pullback from this low here to the highs right here, this is what I've marked, and it's actually somewhere around 4,518.233, and that is also a gap that was left unfilled. Last Friday we tried to see if we could fill it, but we couldn't. The buyers were so aggressive, they bought the thing quickly, right? So if we can get a pullback around that level, I think it will be a nice buying the dip opportunity for me. I will try that with a controlled stop loss, and like a small position to test that area to see if we can push higher. Then,
perfect.
I think
we've said almost everything about gold, but I think what I would add is that there's the same, or how this is so parallel to the what is happening on silver, right? So silver also seems to be ejecting or projecting the same kind of price action, if I'll call it. So yeah, we can just spend 30 seconds on silver and then probably talk about BTC.
Oh yeah, so yeah, about silver, I love silver. This way back around the last quarter of 2025 to now, silver has been putting gold to shame, because silver has been out gold crazy. Gold in a day, gold will be doing like 1% or let's 0.5 or 1%, and silver is doing 7%.
7%. Yeah, that's wild.
People don't notice it. Now let's look at what the institutions or the big guys are doing on silver. Let me just pull up my COT data report. And by the way, before we close, I will just share where you can get the data itself. The data is a very crazy looking raw data set, but then I think TradingView has this. They have this. I just typed TradingView silver. TradingView has this. They have this indicator that shows, that just pulls out the data from where it is, and it shows it right here for you. Very simple. So institutions are 76% long on silver. They are buying silver. So who am I to short silver? I'm nobody, right? So retail traders are also buying silver. Silver is getting some love. People are loving silver. They are buying silver. Silver is an industry.
Do you see something that is really, really interesting happening on silver? Like in the past 3 months, silver has actually kind of 2x its price, and it's going on notice. And I feel like that is crazy. In the past 3 months, from I think October, November, December, and at the early part of January, right? Silver have kind of 2x its actual price. I think it started around 45, and now we are currently around 90. We are 90, right?
Yeah. We're somewhere around 90.
If you bought silver like somewhere where October, then you should be having like double of your money. And people are actually bent on what is happening on gold, and it's so funny looking at that. It's so funny.
I know, right?
Yeah, that's just something I wanted to share. Yeah.
Yeah, man. Thanks a lot. So that thing actually brings to mind that if everybody loves something, like everybody is loving the thing, that should not be the reason why you should love it too, right? That should not be the reason why you should love it too. I think I was reading a book by is it Taleb?
Yeah, Nassim Taleb.
Yeah, I was talking about something confirmation bias or something like that.
Yeah.
But anyway, that's just by the way. So yeah, silver. I'm bullish on silver, and I want to see price break through this current resistance level around 93.30, 3084 level, and probably hit and take that 100 mark. So 100 is my target on silver. So I'll be looking for that breakout. If we get that breakout, I'll buy silver around that level and look for further appreciation of price to that 100 on silver. And same for platinum as well. So finally, let's go to BTC.
BTC, yeah, the people.
Yeah, the people think.
This one Nasdaq.
Kelvin.
Nasdaq.
Kelvin, I want you to say something about BTC. Can you say something about BTC?
Well, actually, right now, for me, in my mind, what you presented, I think 2 weeks ago, is actually happening, right?
Yes, sir.
But like I said, I also had this idea, and then you confirmed it. But mostly, I think you explained that you like to trade the breakouts and the retrace, but I think I've observed that I want to really get on the inside the range before I see the breakout. I think that's two different ways of trying to trade the market.
Right.
Yeah, but we are seeing that there is a breakout of the level you marked, which is nice, and there's a kind of a retest. I think it might want to either stop there at the tip there, the resistance crash using as support now, and push up, or drop a little bit down to either 50% or a clear 38.2% from the most recent swing low to that high. If you measure, we can get an equilibrium 50% or a 38.2%. Yeah, so those can happen. But on a bigger picture, if you take prices at discount now, and like I said, it might consolidate in between 78.6, 61.8%. Now there is a breakout of the 61.8%. The only place it should get to is either 50% or 38 up. And that's the zone you have marked above. Okay. Yeah. So there is clean traffic. You can see there's less resistance from the most the last lower high up there, the zone you marked dropping down. It looks like the candles are very clean. That is what I call clean traffic. Yeah. So if we get that resistance to hold, price will just have to just make a run to that place real quick. Yeah, but the other thing is, if it doesn't hold and it drops back into the range and keeps staying in the range, I think it's going to try to target the trend line again, the trend line you have down there. Yeah, so that's what I can say.
Wow.
Yeah, I think that's perfect. That's perfect.
I know, right? Yeah, so I mean, Kelvin and I, we know Kelvin loves BTC. We had a conversation. And I think he just explained what transpired in that conversation. So BTC, I personally was looking out for a break above this resistance around this level, right? And then we finally got that breakout. And if we get breakout like that, and the kind of breakout we got was a very strong one, right? We got a strong, and by the way, this is the daily time frame. Okay, we got a strong breakout. And now we are now testing this level. If this level holds, I think we can be on our way to that, targeting that 100K and even pushing higher to target this level right here, right? Or if this side doesn't hold, then it could be a fake out. Bernard and I were talking about that. This could also be a fake out, for us to push lower. But looking at this and looking at what the big guys are doing. At first, if you look at the COT data in the past, you see that institutions were selling Bitcoin. But now you can see it is now 50-50. Okay, they are starting to buy some Bitcoin. We're seeing some countries are now buying. Even Ghana, the Ghanaian government is now into crypto, Bitcoins specifically speaking, right? So you can see that Bitcoin is now starting to show some life in it, which is very good. I personally, I would love to see some higher highs and higher lows start forming on the Bitcoin. All right, some higher highs and higher lows forming. I'll be very happy to see that. But personally, I like this level. I think I might give it a start within the week to see if we can push higher. Okay. Of course, I'll be doing that with a tight or a controlled stop loss in case the idea doesn't go through. I might just stop out. So I preserve my capital. Okay, so Bernard, that is all what I can say about.
Yeah, I feel like that is a great submission. That is a really, really great submission. So yeah, we thank you so much, Prof. Iman, for all the wisdom and you share all the wisdom that you shared. And Prof. Kelvin, we really appreciate your outlook or what you presented on BTC. Yeah, that's great. I think I also have I have the same analysis on these, right? That is currently my bias. If I'm to do like what the institutions are doing right now, my bias will be on the long side. I'm looking at longing, that is buying BTC, if I'm to have a bias on that. Because where we are now, it's more of we being on the break and retest end. So probably get an entry to the buy side to approach somewhere 108 as you shared on your chart. But if it comes down, I mean, I wouldn't worry. I think my SO on that trade will be somewhere a little bit at the beginning of the range that was recently broken. So if it takes me out, I'm good. I'm just gonna, wait until I get a very good opportunity to buy again. But my outlook on that is gonna be a buy for sure.
Okay, Bernard. So, Bern, if you can hear me, I know some people are curious about the COT data. Can you hear me?
Yeah, I can hear you perfectly.
Ben, can you hear me? Yeah, I know some people are curious about the COT data, and I just want to use the opportunity to share and let you guys know where the data is found. So at your free time, you can go through it and see what the big guys are doing. So I'm going to share my screen. Let's give me a minute. Today we are just way ahead of time. So hold on. Okay, so you should see my screen in a few minutes. All right, so the way that we check for silver and gold and BTC is the same way you can check for currency pairs.
Yes.
So you get to see what the guys are doing on the currency pairs as well. So share, I think you should be able to see my screen now. My Google.
Yeah, it's clear. It's on there. Yeah, Commitment of Traders, CFTC. Yeah, perfect.
Yeah, so you just head on Google and you just type Commitment of Traders, CFTC, and then it will just pop up. All right. So when it pop up, you can have access to all the data points. This is metal, everything, right? Financial. So this financial, you can see this way you see the currency. All right. And this how the data looks like.
This is if you want to go in. Yeah. If you want to go in depth into this, that's where you would want to look at all these tables. But I feel like what you have on TradingView is enough for trading. You really want to analyze all these numbers. It's too much numbers on there. So if you can pull out the indicator on TradingView and kind of look at the numbers in there, that's okay. You don't need to have all these numbers. I mean,
I know, right?
I know for me being a math guy, I'll be cool looking at this data set, but I don't think everybody would want to see this.
This one is good for our eyes. Me and Bernard.
Eyes, this is good for our eyes, right?
Yeah, but if you don't like it like this, but I just wanted you people to know that it's actually
that's for education.
That they share so that we get to see some kind of transparency in what the big guys are doing, right?
Yes, perfect.
So that is that, and I should have said this early on, but thank you all, and also DiviProp team for helping us do this live stream, and thank you all for joining. I hope that this session was educational and it was impactful. So same time next week we're going to meet, and you can also, if you miss it or you want to invite someone, the person can within the week. This session was recorded, so you can visit our YouTube channel and check out the video for yourself. Okay, Ben.
Yeah, that's great. That's great. That's perfect. Yeah. So you'd work on posting the video in the next like 30 minutes to 1 hour, and then if you miss the beginning, you can log on to the YouTube and probably post any questions you have, which is really, really important, what you're looking at this point. Because we don't have any means of communicating on the content we are presenting on here, we wouldn't be able to kind of know if you have any questions. So I think myself and Iman and the team will work on posting the video as soon as possible and then sharing the link on the platform as well, just so that if you have any comments, questions, or any ideas that you would want to add on this session, you can go on there, have that, and then we can get more interactive on that version. And I also appreciate each and every one from the team and the people who joined today on learning. And also, I wish you a happy trading week.
Yeah. Have a pitful trading week.
Pitful. Yeah. Yeah, sure.
Thanks. Before pick.
Okay, guys.
And
Thank you. Thanks.
yeah,
Thanks, Ima. See you.
yeah. See you guys.
See you guys.
Bye.
Bye.
Yeah. Hey, someone wants to speak. All right.